Today on the Accounting for You podcast, we're continuing our conversation with Aaron Smith, a commercial lender from People's Bank. Today we're going to get into the government-backed lending, maybe the SBA and the USDA. Welcome to the Accounting for You podcast, brought to you by the accounting firm of Adkins & Reynolds CPAs. This podcast is designed to provide relevant tax and accounting information to help you and your business succeed. If you enjoy listening in, please like and subscribe to our channel. Now, on to the show. Well, welcome back to the Accounting for You podcast. I am Chris Reynolds, CPA and partner with Adkins & Reynolds CPAs.
And I am Jay Adkins, partner and CPA with Adkins & Reynolds CPAs.
Well, as we mentioned a little earlier there in the intro, we have Aaron Smith. He's a commercial lender with People's Bank. And we're going to talk today with Aaron about how to make your business ready to get credit from a bank, maybe what you need to do with your financial statements, and how the commercial banker or lender can actually work with us, the accountant, to make sure you're ready to get that loan and pay back that loan. We were talking, it sounded like, you know, as the commercial lender, you want to be a trusted advisor. You want to be in working with the CPA, maybe a financial planner for the business, whatever that may be for that business. It sounds like you're trying to be or want to be very relational to the client, and that's because you want to know and understand and really get into to help that client. So with that, and with your past experience in banking, do you have any, let's say, success stories? Anybody that you can think of that this was a home run for the bank, for us, for the client?
Yeah, I do, and it's a great question because one story really stands out. Kind of actually took me from my previous employer that kind of began the relationship and started here. There's a business in Putnam County named Bright Futures Learning Services, and I'd met the owner of that company when I was in my previous role. And when I made the change over to People's Bank, she kind of followed along because of some of the things we had done. And one of the things that I'd done is their business is kids with autism, and kind of got really personal with me because I didn't know much about autism until I got to know this company. And it's not one of these companies that I can hire you off the street and put you to work with these kids, because they are, it takes a very high skill level, and most of her employees can take anywhere from 18 to 24 months to train to be ready to work with these kids with autism. And we're talking young kids. I mean, they feel with the ABA, which is Advanced Behavioral Analysis, that is, the younger you can work with a child, the better. So we're talking kids that are 2 years old. When I went to meet with them, they literally were in leased space. They were growing. They had over 100 kids on their waiting list at the time. And it takes 18 months to 2 years to get a trained professional to work with them. So I immediately asked to be introduced to the CPA firm, which they worked with. And we sat down and had a very good conversation and strategic planning session. How do we get the financials in line to be able to move forward with what's needed? So they'd actually identified a property that they wanted to buy. Was not a property that was move-in ready, if you know what I mean. They were construction that needed to be outfitted for the industry. So immediately, as we began to plan, I went out and looked for avenues. How can we get this business where they need faster than 18 to 24 months?
Right.
So what I was able to do is I was able to find a government guarantee program called the SBA 504. And the reason we found that program is because, when you're looking at a balance sheet or your financial statement, we needed to balance interest rate expense. We needed to find a way, because interest rates at that point, I think, were 6.5%, kind of where they are now. But with that product, the SBA 504, those are bonds. So the bond rate, I think, was somewhere in like 3.5%. So that really began when we looked at a monthly payment. From a cash flow standpoint, we talked about earlier, that really began to work. So what we were able to do is we were able to within a year of that original session, we were able to begin the process. We were able to get with the SBA, got the 504 approved, bank approved, SBA approved, and within a few months of that, she was moving. They were already constructing the new property, and within 7 months they were in the new facility, which allowed them to add an additional 60 kids to the facility. And that was a huge, and not knowing what I do, not knowing what I know now, is that Jill's story was going to touch home to a lot of people. In 2019, Jill was awarded West Virginia Business Owner of the Year and Woman-Owned Business of the Year, which is a high honor.
Oh, yeah.
But then the following year in 2020, she was named National Business of the Year by the SBA. She was the first woman ever to hold that award in the U.S., and she's the first West Virginian to ever hold that award. So not knowing what I was doing back then, as I say, turned into a huge success story for her. Plus, obviously, the recognition that came from that for her. And, of course, it wasn't amiss that who did that loan and what bank put that together. And so it's gotten the bank itself a lot of recognition because of that. And I think that's the key part. I know we transitioned there to the SBA, but I think that's a key part of being a trusted advisor in the commercial banker role, is that we just don't have a one product fits all, loan package. Our job is to look at how do we need to structure a loan, one, to hit the financial metrics we need, but two, be able to give the loan product or program that fits the customer's needs.
Right.
And not just a one-off that, hey, we have this on the shelf, let's take it and ring it up.
Right.
Yeah, I think that's a great example of how your role and the CPA's role, because you were working with them initially trying to get their financial statements shaped up, of how working together you can achieve great results.
Yeah.
Great results for the business. So yeah, that's awesome. Now you said something about the SBA. I know as an accountant that can be a dirty word because we've heard, and I've worked with SBA loans many years ago, and the very first few that I worked on, I just thought it was just overly cumbersome to work with. And so when a client says, I think I'm going to get an SBA loan, I just kind of go, oh goodness, here we go. Buckle up. It's going to be a bumpy ride. So let's talk a little bit about SBA loans. Tell me, Aaron, that they're not as bad and ugly as I feel they are in my head.
Chris, they are not as bad and ugly as they feel are. I will say that there are many people that don't know how to handle an SBA loan. I was one of those. I'm sorry to the customer that had to experience my first time many, many years ago. However, there are several factors that go into that. It's funny because I get the same reaction whenever I come to a client and I may utter the words government guarantee and they go, tell me not the SBA. And I go, no, tell me why not the SBA.
Right.
And it's always a horror story. And the reason it's a horror story is because two factors. One, whoever the lender was they were working with has never done an SBA loan in their life. Or two, the credit team within the bank is not a preferred lender and they don't want to do SBA lending. And I think that leads me into a two-part factor. It's vitally important that if you're going to do an SBA loan, to work with a bank that is we call it acronym world in the bank, PLP, or preferred lender program. And what that means is we don't have to approve your credit within the credit department and then send it out to the SBA, which is in Sacramento, that's California, which is where they do all their credit underwriting for all the SBA program. That could take 4 to 6 weeks. So you're telling me, if you go to a bank that's not a PLP lender, you're going to have to go through the credit process. That could take several weeks, and then you're going to have several more weeks. So I've heard the horror story where customers have went to a lender that was not a PLP lender and taken 7 months, 8 months to get an SBA loan. That's absurd.
Yeah.
I normally will tell someone, look, I know all the things we need to do now. I'm versed in it. Here's the information you need to give me up front. You need to fill out these forms. And it's going to take from the time you bring me a complete package, whether it's if it's not real estate, we're probably somewhere in the 65 to 90 days range. And I would say 75 to 120 with real estate within the SBA, because you have due diligence and you've got to get environmental reports and various things. So I give that expectation now, because as many of them as I do a year, I can almost fall within one of those buckets, whether it's non-real estate related or real estate related, and hit those dates.
Okay. So as a business owner, I'm coming to you to get an SBA loan. What different information are you going to need from the traditional lending?
Yeah, so there are several things, and I know you guys just love to prepare the first thing I want to mention, which is projections. I know you guys love those. And I'm yet to see a projection that's never cash flowed. I've never seen a projection that somebody said, we're going to lose money.
We're optimistic.
I mean, if you're going to shoot for the stars, let's shoot for the stars.
So what we're going to require if you're a startup business, and if you're a startup business, we're going to want to see 3 years of projections. Those projections are going to be month to month in year 1, quarter to quarter, years 2 and 3, and we're going to want to see an opening day balance sheet. And an end of year balance sheet as those years progress. We're going to want to see we're going to see those projections. The other thing that, even if you are a business that's been in you've been in business many years, we may want to still see projections. So if you're purchasing another business, maybe it's a business acquisition, maybe you're buying an industry or new technology that's going to increase profit margins. We may ask for some of those projections to see, okay, today your profit margin is this, but going forward it could be this. We're going to want to kind of see a pro forma, if you want to call it that. So, we're going to want to see that information. If you are a startup business or within the first 2 years in business, we recommend you work with a CPA to put that business plan together. Now, some people come to us and, I don't have a CPA. Well, let me introduce you to some. There are CPA firms out there that don't want to put time and effort into putting a business plan together. And there are other avenues. Your small business development centers in the area you may live. Those folks are out there to be able to help you prepare that business plan, because business plan is not all financial information. There's a lot of other things that go into that. So from a small business standpoint, if you're within the first 2 years, we're going to want to see a business plan.
Okay. So what is the benefit to the client that's getting the loan of getting an SBA-backed loan as opposed to a traditional loan?
Yeah. So it depends on what the need for the loan is. Okay. Depends on, not everybody I think gets the idea that SBA lending or government guarantee lending is all for startup businesses, and that is further from the fact. We may have in the case where we just talked about with Bright Futures Learning Services, you get we were able to use the SBA not only to hedge some of the interest expense and the better interest rate, but we were able to extend the amortization of that loan from a standard 20-year to a 25-year, which made the cash flow look better. It made sense.
Major payment lower.
Payment lower. Yeah. Absolutely. The other thing is a lot of times the business just may not be ready for the growth. We can see it in the financial statement, but yet you still need this equipment. So what it does provides for you is it provides us the equipment you need, but it also provides us a little bit of security as the bank to be able to issue this loan to you so you can get the equipment you need. So that's another advantage. So I always look at this as whether you've been in business a long time or you're a startup, there may be a factor or reason why you may want to use an SBA or our other government partner, the USDA.
Yeah, so there are other government-backed loans.
Yes.
So we've talked briefly in the past about USDA loans. So what's the difference, or what's the deal there?
So couple things right off top. USDA has a lending limit of $5 million. So that's a lot, even if you're a small business. Some people say, $5 million, never seen that. But SBA will lend up to $5 million. We will then mention the USDA, and people say, well, why are farmers lending out money in that agriculture? And why I'm not in agriculture. And no, it isn't. But the government has money to lend. And what a lot of people don't realize is that government entities lend money in what we call underserved or depressed areas. And that's part of the USDA. And when you look at the state of West Virginia, Southern Ohio, or Kentucky, almost every one of those areas that you may live in will qualify for USDA. Mm-hmm. So USDA will go up to $25 million. And everybody goes, well, wait a minute, a small business owner, $25 million is a lot of money.
Yeah,
It absolutely is. The biggest difference from USDA and SBA is length of term. USDA will allow you to amortize out to 40 years on certain real estate, mm-hmm. certain equipment, useful life of equipment. And the biggest difference is SBA will only lend to for-profit companies. USDA will lend to municipalities and not-for-profits. So there is where the big advantage comes, is depending on what client you're working with.
Okay. Now, from the client's view, is it working with the SBA or the USDA? Is it similar in its requirements to get into one of those loans?
It is. The major difference from the bank's perspective, once we approve a loan that may have a USDA guarantee, mm-hmm. unlike the SBA, USDA has state and national offices, and once the bank approves that USDA loan, it then has to go to the USDA state level or national level to be approved. And they will determine that on the front side.
Okay.
So when we're having those conversations and we bring in that USDA agent, we will determine that before we ever get started, so we can provide the time frame that's needed, so you understand what that time frame is going to be.
Yeah. A couple of things that I wanted to bring up, mm-hmm. but thinking about getting the package together for the bank, not holding things up. Again, we circle back to clean financial documents, so the client will be prepared for you to get things started. Also, as far as the projected financial statements, it's very difficult to do an accurate projection of any kind off of messy financial statements for an existing business. Mm-hmm. Yeah. And then we could also provide some expertise if it's an existing business or a startup business that comes in and may have some unrealistic expectations as far as projected financial statements.
Yeah, we see this. That's something we see all the time, and whether it's working with a larger company, it's not as bad because they have controllers and CFOs. Mm-hmm. Some of the smaller companies is where we see a lot of that struggle. They don't have someone they work with regularly, mm-hmm. and we send them. I will put together a list of information and send to them or send to their bookkeeper, and I don't hear anything for a few days, and I already know. I make the phone call and like, what's an income statement? Mm-hmm. And I'm like, okay, so it's a profit and loss. Oh, profit and loss. What's that?
Yeah.
Yeah, and that's why it's vitally important, even if you have a small business, is to get a CPA on your side to get your books straight way before you're thinking of getting loans, because it's just going to make your life a ton easier later.
And I think it's a great point. I know we were talking about government guarantee lending and whatnot, but I think it's vitally important that you sit down and you do that tax planning. I mean, you don't get up every day and not plan what job you're going to work on or what job you're going to bid on. Mm-hmm. You should take time in each of throughout your day or throughout your week to sit down and plan, what's the next steps for my company? Let me call my CPA and let's begin to plan. Because I see a lot of companies fail to plan, mm-hmm. and then they're standing there and they're mad or upset because they can't get the equipment or they can't get the loan that they needed because they didn't take the time to reach out to their CPA or reach out to the commercial banker and say, hey, I don't think that I have all this. Who do you recommend that I can talk to? Because I don't mm-hmm. think the person I'm working with has the right expertise.
Right.
We do have some horror stories that I've heard before in the past of clients that we prepared financials, and they say, well, we got them. We put them in the drawer. We're okay. We have cash in the bank. And that's not always going to be the case, mm-hmm. and there may be some issues there to talk about. But
yeah. And I think it's vitally important, when you're having those records in the right order. I mean, you got to realize when we're talking about government guarantee lending, we're dealing with the government. There are going to be some annoying forms that you have to fill out, but also it is our job to educate people. One of the number one things we find that kind of, I guess, makes someone ineligible for an SBA or USDA loan is they went through school, they got busy, they started a company. Well, I never paid my student loans, or oh gosh, I didn't pay my bills and I filed bankruptcy, 5 years ago.
Mm-hmm.
Those two items right there unqualify you to, for a USDA and an SBA loan. And then we'll find that, oh, well, by the way, we're halfway through it and yeah, I've got an IRS tax lien. No, you should have let me know that up front because we're done at that point.
Right.
So, you want to make sure that you're working with the CPA to understand and make sure that, one, I paid my bills.
Mm-hmm.
I don't have anything outstanding owed to the federal government, because that could be the only option you have to secure the financing to keep your company moving forward. You don't get it, what happens? Maybe you shut the doors.
Right. Yeah. All right. Well, Aaron, it's been great having you in.
Thanks for having me.
And do you have any final thoughts on anything that we've talked about over all of this?
I just think the thing I have to utter, whether you're a $50,000 revenue company or someone of bigger size, or maybe you're a company that we see a lot of times that is in between that growth mode where we don't have a controller, but we need a controller, or we need a CFO, but we don't. Reach out to guys like Chris and Jay. They're going to be able to vitally help you within your business, because we see this a lot when you hit that point where I need to have someone, but I can't afford to have that controller because I can't afford to pay them full time. These guys working with that CPA firm, be able to do that CFO for hire or that managed bookkeeping is vitally important for not only for your understanding, but vitally important to grow your business and keep it going on the trajectory that you want it to. I see it all the time. And I would say that's the biggest thing, no matter what size you are. If you're going to come to the bank and you want to borrow money, we want to be your financial partner, but you have to have things put in place and in line before you come.
Yeah. Well, we appreciate that.
You're welcome.
Jay, do you have any final thoughts for us?
Yes, I just wanted to add in, we've talked all through the podcast about, the CPAs, the bankers working together, how incredibly important it is for all of your professional team that have different skills to work together. Keep the banker and the CPAs and other professionals you work with in the loop so everyone knows what your situation is, because we all have different skills and we can help with different things, but we need to know what is happening with your business to be able to fully help you.
Yeah. Sounds good. Well, so if you're interested in working, obviously, with our accounting firm, you can reach out to us. We have all of our contact information in our show notes. Aaron, if people are wanting to work with you directly, how would somebody get a hold of you?
Yeah, so they can reach out to me. I believe we're going to put the information in the show notes here. Mm-hmm. They can reach out to me at my phone number, my email. I am on the road. I will also provide my cell phone number. Would love to sit down and talk with you and see if we're able to even help you. For me, it's all about a relationship and not a transaction. So want to come out, want to understand the business, and also want to understand and see how you operate your business as well.
Yeah, sounds great. Yeah, so all that information will be down in the show notes, how to get a hold of Jay or myself or Aaron. We all be very willing to work with you and to talk to you and to see what we can do to help you. So if we don't have anything else, I think that's pretty well as a wrap on this episode. I'm talking of commercial lending and stuff. We appreciate Aaron coming in. Until then, we will see you on the next Accounting for You podcast. Thank you for taking time today to listen to our podcast. We appreciate listeners like you and ask that if you enjoy what you hear, please like and subscribe to our channel to ensure you receive the latest episodes as soon as they come out. If you have any questions about the topic we discussed today or would like more information on becoming a client, please do not hesitate to contact our office by visiting arcpas.com or theaccountingpodcast.com.